What happens when we get three full candlesticks in a row? That's exactly what we're going to talk about today, because if tomorrow we close lower than we opened, we're going to get a third full candlestick. And what this means is that we could either be still in the early part of the move where we're still going higher, like we were over here as we're getting those full candles, or it could mean that we're actually a little bit closer to the top, like here, where we go sideways to down, sideways to down. And this is really important because we've been relying on this pattern for a while, continued strength, which means higher lows and higher highs. I've been focusing on the weekly and the monthly time frame, but before we get confirmation of this pattern breaking, which we're looking at going back to 2020, we can get warning signs on the daily chart. So that's really what I want to talk about today. If, again, keyword if, we get a third candlestick in a row tomorrow, what usually happens next is that we're going into a corrective wave. A corrective wave could be very short, where we just go higher, like where we just go higher. But it can also mean that we're going sideways to down, like in these periods here. So even though we're not going to see the weekly candle close out until Friday, what we can look at today is that ever since our low going back to October, there's only been 1 week, like we talked about on the weekend, that we actually form a lower low. So to make this really simple for you, if we're going to go lower, like I talked about on the weekend, I still think the bears are a little bit early. And again, being early is like being wrong. So what I really want to see is whether or not these three full candlesticks in a row, if it happens tomorrow, does it lead to sideways to down? Because that would break the weekly chart and that would invalidate the pattern here where we see continued strength. I see continued strength as higher highs and higher lows. So this will be very important because as we close out the weekly chart on Friday, we're also going to be opening the new month of March. And if we keep tracking this pattern, which we've talked about of higher lows and higher highs, then it means that going into next month, we cannot afford to lose the low. That is currently at 483 on the SPY. For SPX, it's 48.53. So now we'll pop over here to SPY. So if you look at SPY, and we think about the simple pattern, because that's really what I like. I like simple stories. I like simple patterns because there's a lot of noise out there. Everyone thinks we know everything. Everyone thinks they know where we're going. I just want to follow the charts. I just want to follow the price action. So if we keep seeing higher lows and next month we don't fall below 483.8, we remain over our all-time high, which means we remain in a bull market, which likely means we're going to keep going even higher, even if people don't believe it. So there you go. At a very high level, that's what I want to go through today. And just before we jump into the next section, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. So as we think about continued strength, and we know that we're closing out the monthly candle, and we know that usually, again, we talked about on the weekend how a year or more out, we're usually higher. Well, that doesn't talk about day-to-day price action. So on the weekend, we like to focus on higher timeframes like the weekly and monthly. But on the daily chart, yes, we're still pointing massively up. Let's look here. As we open up the month of March, 492 was resistance. Well, we're well above that now. We got one uptrend. We got two uptrends. What does this mean? The market's like really strong, like historically strong, like we haven't seen since the 1970s or the 1980s. So until we stop going up, which means losing our first uptrend, losing our second downtrend, and to make this really simple, fall below the 50 DMA. The 50 DMA is the short-term price. So if we're over the short-term price, we're bullish in the short term. It's that simple. We're in blue sky territory. We're trending higher. We're over averages, and we're going to get a reset. So even if we get three full days in a row, which means tomorrow we close lower, the bears still have a lot of work to do. They are drowning in losses, and they're getting desperate. So we have to remember that if we now focus to the levels, we're looking for a move higher or lower for support 3 to resistance 3 of about 14 points. So far on the week, we're only down by about 2 points. So we're still looking for the potential of another 14 points. Sorry, 12. Well, that's like a lot more than what we have right now. Yes. So if we're starting to get a warning that we could be going lower with that three full candlestick pattern, let's just be receptive that if we go down to 494, let's not be little pansies where we're like, oh my God, we're on support in a blue sky breakout on a weekly higher low. Now we're bearish. No, that's where we should be. That's where we should be bullish. We're currently close. We're basically in the middle right now, around 505 at support one. So if we think about what could really move the market, well, on Wednesday, not tomorrow, we get GDP. And then after that, we get PCE and jobless. Then we get European CPI on Friday. So now that the week is opened up, I'll tell you what I think. I'll have an opinion, which is hard to have on YouTube because people never let you forget about it. Oh, you thought this one thing this one time. Yes. Because if we look here to something like Bitcoin, there is still risk appetite out there. Look, Bitcoin is up by 5.4% today. Ether is up by 2. It's just melting higher and higher. Pop, flag, pop, flag, pop. And people don't believe it, which is what we did on SPY. Pop, flag, pop, flag, pop, flag, pop. Is a flag really bearish? Well, it is if we stop going higher and we lose the uptrend. But until then, like, look, Bitcoin is the riskiest asset. If people are willing to bid up Bitcoin, why won't they bid up NVIDIA, S&P, the NASDAQ? I don't know. That seems like a really easy thing to extrapolate from here. Okay, so let's go further down here. What else do we have that's up? NVIDIA, the king, is up. Tesla is up. Otherwise, the trillion-dollar companies are a little bit red. But here's what I found interesting. As I look here to what's actually green for ETFs, SMH, chips, they're really bullish, which means not just NVIDIA. The chip complex is actually really strong here. Leaders are still leading. XLK is green on the day. That's mega caps. What else is green? The Russell. Oh my goodness. It's got 4 hollowed candles in a row. People are bidding up the Russell, which means they think and rates are going to go lower. Why does that matter? Well, because this week, when we look at the data points, now that we have the forecast for the year-over-year number, it's 2.8%. Whoa, we're getting awfully close to the Fed's target of 2. Yes, this one current month might be hot, but look, the trend is very clear. It's down from 2.9 to 2.8. And then on Friday, the CPI in Europe is supposed to go down from 2.8 down to 2.5. Hey, we're getting pretty close to 2% here, boys. What does that mean? It's time to start cooling on the interest rates. It's time to start looking at the feedback. It's time to start talking about the pivot. And that's exactly the feedback I would be looking for. The Russell up, which should benefit if yields now start going lower. ARK, which should benefit if yields start going lower. ARK is up by 3.4% today. Okay, well then other risk assets should be going with it. Like what? Like Bitcoin. Oh, so like that kind of makes sense. Yeah, it kind of does. And the NASDAQ, again, we're looking at QQQ, is down by 23 cents or 0.05%. Basically nothing. The mega caps, or XLK, they're doing even better. It's green on the day. So it doesn't look like anything out there is really giving me huge concern. If we were to fall back into greed, that would be a knock for the bears. And I'll actually even give you another data point for today that I might not have enough time to fully elaborate on, but we're getting inverse alerts for SARK, for RWM, which means short the Russell, short ARK. But the risk reward's not really good. And we can talk tomorrow. If things go red, we'll talk about these alerts that it also do. SH, DOG, and how the bears could actually capitalize on this momentum. Otherwise, I think that last week we had an opposite move where the first half of the week was down, then we went up. Well, if this data comes out into the later part of the week, notably on Wednesday with GDP higher than inflation, and with inflation coming down, I think it's going to be a buy into the second half of the week. So if we slam down to support, are you going to be scared? Well, if you are, be receptive of what you're doing now. Think about what you're going to regret. I buy and it goes lower, or I don't sell and it goes lower, or I do not buy and it goes higher, or I do sell and it goes higher. This market is tough. It is difficult. I really encourage you to watch the video now queued up if you want more on my thoughts going into the weekend. If not, I look forward to seeing you at 9 a.m. tomorrow for the stream. Thanks so much.